Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is pretty much one of our big workshops that we like to do. There's a few different things that we definitely are interested in doing on these live streams, and one of them is just to pass along any bits of education that we can with strategies. And lately on the How to Trade Com YouTube channel, we've been all about strategy for about the past 4 or 5 months. There's a bunch of strategies out there today. We're going to trade the 9 EMA strategy. We're also going to use a little bit of RSI confirmation. Those of you that have seen these live streams, you know I like RSI as a confirming tool, and we've had some pretty good luck trading it live. So we're going to go ahead and scalp PCE today. The fallout from PCE. We've got a big event that happened over in Thailand. Big earthquake, and I'm going to start there, give you sort of a teachable moment about if in fact you're in the market and something like this happens to you, how to handle yourself. And we're also going to talk a little bit about systemic risk. Then we're going to go through a nice trade idea that we've got simmering with the Euro Great Britain pound. This one went live a couple days ago and it's looking pretty good. We've got another trade idea, the dollar Swissy I'm going to show you, and then we're going to get right into the 9 EMA scalping. I'm going to show you how to do it, my approach to it, and what exactly we can hope to accomplish, which is basically make a few bucks. That's the idea here. So I want to welcome everybody. A quick shout out to the folks on YouTube. Listen, we've had a lot of problems. We've had a lot of problems with our live chat. For some reason, we're not getting the flow of chat. So if you are sending messages and questions and things, I don't know that I'm going to be able to see them. If I do see them, I'm more than happy to answer. But we've had some issues with that the last few sessions, and we're working on getting those taken care of. So welcome, everybody. If I can see you or hear you, that's fine. If not, that's fine too. Okay, guys, let's get this thing rolling. First place I want to start is in Myanmar, tremors in Thailand. This was a major event, 7.7 magnitude earthquake, really incredible damage. Nobody knows really what the fallout's going to be from this. If you're in that region, thoughts and prayers. Stay safe. Take care of yourself. That was an absolute devastation. Some of the pictures coming in are just blowing me away. We haven't seen anything like that in quite some time. Full disclosure, I've been in a couple of earthquakes, the largest of which was about a 3.5, and it was big. It felt big, so I can't even imagine what a 7.7 is and the damage to the infrastructure. For us, we're finance people, we're traders, and right here you can see the big stock exchange there in Thailand. They suspended trading, about 5 hours ago, and you saw the big sell-off there, about 1%. The big challenge that you're going to have here is where does this thing open? This was a double whammy. This occurred on a Friday session. That means that the market does not reopen until Monday's session, and if that is in fact if you're long and things go off the board, or maybe you got in and got to the short side of this on a derivative somewhere else, I mean, this market could legitimately open anywhere. And this is what we call systemic risk. Listen, timing is everything, and it seems like these things always occur on the weekend. Now, you've got a major event. We don't know the damage. This is a catastrophic event. Market was down anyways. You can see that this stock exchange, the Thailand Stock Exchange, I mean, this is the #1 index over there. It's just been absolutely in terrible shape going back really to that crossover, that 920 crossover back in November. It's just been an absolute bum rush south. What happens now? This market can open anywhere. Remember, the market makers, the big money, the big dogs, they are the ones that are going to decide what price this thing opens at. And if you're a retail trader, you're along for the ride. So if you got caught long on this one, I'm very sorry to hear that. But this is a good example of systemic risk and why, as traders, we try to get in and out of the markets so we don't get caught by the unexpected. Believe it or not, somebody will lose everything on this trade. I guarantee it. Might be more than one person. Might be an institution. You might see banks go under. There's always bank failures surrounding disasters. Why do you think that is? It's because banks are all in the markets. Insurance companies are all in the markets. And if they're the wrong way on something like this and the market makers can't bring stability to this thing when it opens, then it's just an absolute fire sale. Always remember that in trading, there are no rules. This thing can open anywhere. It might open down here if the damage is bad enough. It might open at 1,000. It might open at 970. And if you're leveraged, if you're in a leveraged long, you got destroyed. So that's one of those things that you really got to be careful of. Okay, it doesn't look like our live chat's working again today on the YouTube channels. So remember, I'm going to do my best to get that up and running, but we've been really struggling with our provider there. So, hey, it ain't my fault. I didn't do it. In any case, we do have another trade idea to cover. I want to get this one out there because it's a pretty good one, and it's in play right now. These are our daily trade ideas that we put out. Well, we put them out every day, but if in fact you come by the How to Trade trading room, you get access to these in our analytics thread. And also if you follow me, these also are beamed to your email inbox each and every day. So you'll have an opportunity to get a tradable, an actionable trade idea. I get that question a million times. Shane, do you have signals? I go, no, but we got trade ideas, and our success rate is pretty darn good. We had a no lose January, which was unbelievable. In any case, right here, Euro Great Britain pound support was in play. This trade idea was put out the other day, and you can see we had a macro support zone right down there. We were buying about 83.27s monthly chart. I love my macro Fibonacci's as support, and then we trade those on short time frames. And this trade's looking pretty darn good. When we had a hard test of this zone, sort of sold off down to about 15. But a horizontal support zones means you're looking to bid and get in on the rally. Well, what exactly happened here? Good stuff happened. The first initial, we were actually long back there a couple days back. We got this nice sell-off there, and then we bounced, and then we came back down. So we've had a little bit of good price action, but this looks like it's the move that we're looking for. I think we're going to go up and hit our take profit here. You can see we sort of sold off down to 15. Right there was our entry point, so a 12-tick draw, and right now we're in the green by about 20 pips. I think we're going to go ahead and cash that one in, and I believe it was good for 30 pips. So we'll see if we spin higher. It looks like we're going to spin higher. Euro Great Britain pound's always really hard to trade, and it's definitely one of these things that's difficult. Let me see, Emmanuel. All right, maybe our live chat is working. How can I join the trading room of the group? Emmanuel, you head on over to howtotrade.com. And sign up. It's free. Everything's complimentary and free. You get in there and you can get access to these trade ideas. You can also get access to me. You can send me private messages. Hey, Shane, we love the streams. Hey, Shane, we hate the streams. Hey, we don't like the videos. Hey, what about this? Here's where I am in my trading. I encourage all that. If you guys want to send me private messages, go right ahead. So that's what you get there. And also we've got a bunch of academy videos and really training stuff, a lot of strategy stuff. If you're looking for a strategy, price action strategy, we've got them in there. There's a lot there. In any case, this Euro Great Britain pound's looking pretty doggone good. Another trade idea, and then we're going to scalp some 9 EMA. You can see right there, you got really an interesting formation. I love converging indicators. Absolutely love them. They're my favorite thing, probably in the whole wide world. There's a few other things I like better. I like a nice big rib steak. Man, I remember growing up on rib steaks. Now you go to the store and they're like $30 a piece raw, and it's absolutely unbelievable. Let me see. I finished all the modules. Yeah, Emmanuel, if you're not getting the trade ideas, just click on my picture at the top of the screen inside of the trading room, and those are beamed out to your email. You'll just follow me there, and it gets sent out to your email directly. In any case, U.S. dollar, Swiss franc, this is one that I'm looking at. I love converging indicators. We've done a ton of work with EMAs. We're going to trade EMAs here today live, but I love the 13 EMA. The 13 EMA is my favorite. That's what I do. I do the 13 EMA. That's it, and I love it when it converges, lines up with a really nice longer term Fibonacci level. I love my weekly levels. My monthly levels are fantastic. I mean, right now that Euro Great Britain pound's spinning higher. It's up around 83.50. We're going to get paid there. As far as what I think is going to happen with this dollar Swissy, this is a textbook L formation. I'm not going to spend too much time because you guys want to trade the 9 EMA, but right there, okay, run and rotate. All right, so what does that mean to us? It means we're in a bearish type of a situation. 38%, I absolutely love 38%, and I love it even more when my 13 EMA is right there on the weekly. So we're going to be right in the same area, very tight week for the Swissy. You're going to see this break, and potentially, if we do break up, that's a big if, then we're going to get involved to the short right there. And our shorting zone is going to be somewhere around 89.16 to about 89.25. I love quarter handles. They're probably my favorite to trade. 25s, 50s, and 75s. Love them. And also the big round numbers, the double aughts. But right there, I'm looking to sell. I want to sell from that zone. I'm going to have a trade idea out later today that breaks that down with an exact entry point and a profit target and things. But I do believe that we're going to be doing pretty well there. We're going to be doing pretty well there. So interested, very, very interested. I think we're in for some good stuff here. All right, everybody, let's get on to it. If you want to trade any of these strategies or trade ideas, head on over to switchmarkets.com. They can get you up and running with a 100% credit bonus. Also, there's a contest going. There's free contests all the time. You can win upwards of, there's a stack of cash over there. Head on over and ask them how much they're giving away. I can't remember. It's a lot, though. So they got contests all the time. Double your deposit, 100% credit. They've also got zero commission accounts and tight spreads. Check out Switch. They got everything you need. All right, week 13, the week that was. What do you got right there? Friday, PCE price index. That's the big event today. Now, remember, the PCE price index is what the Fed looks at when they talk about inflation. Right now, we're seeing some weakness in stocks. I'm watching the NASDAQ. We're going to look to scalp the NASDAQ on the 9 EMA here in a second. But the reason why we're moving and we're shaking, it's because what? It's because of the inflation numbers. They came in and they are not good. There's questions. There's real questions about recession. There's also a lot of questions about monetary policy. So right there, PC prices, that really is the big event this week. This was a great week to trade. And the reason why there was no garbage from your central bankers. There was nobody out there shaking up the markets. There was nobody doing much of anything on the policy front. And that is really good for us because it doesn't shake the markets up. Last week, we had the Fed, the BOE, the S&B. It was a mess. The BOJ. It was a mess. It was awfully choppy price action. I call this unfettered price action, and that's what I want. I want a period of time where we've got high volatility, high participation, but I don't want anything coming in and screwing up my price action. I hate it. So last week was sort of me sitting on my hands week. This week it's been a lot different. And that Euro Great Britain pound trade, that's just the latest. We've had some pretty good stuff. We're actually waiting on a Tesla buy as well, and I'm hoping we get it soon. In any case, right there, what we've got right there is a PC price index. So no donation Friday. This is our psychology for today. Let me see, JC, is Switch markets ever coming into the U.S.? You know, there's talks. There's going to be some big things happening with Switch in the next 6 months. So sort of I got to keep it under my hat right now. But some of the things that I've heard, and believe me, I'm not in the loop for Switch. I don't work for Switch markets. But I have heard some things on the regulatory front where there's going to be some major advancements there at Switch. So as of right now, JC, if you're in the United States, we recommend Owanda. That's another one of our affiliate brokers that are brokers that will actually, consider giving money to, but they use Owanda in the U.S. I have accounts with Owanda and Forex.com, but Switch, not necessarily sure. All right, no donation Friday. Our mindset, if we're having a winning week, and I put this together from my own beats over the last 14 years. I hate losing on Fridays, and I've done it, and it just bothers me. What you have to be able to do is keep momentum going in this game. It is a marathon. It is not a sprint. So our psychology lesson for today, keep momentum. Momentum is everything. Momentum. If you get a heavy something rolling, it's hard to stop that heavy something. Well, the tough part's getting it rolling first, and a lot of you have struggled in your trading for a long, long time, and it's because you can't get any momentum. But once you get that forward momentum going, then you just run. And you feel good and you trade well and you feel a lot better about what you're doing with your life, not just money, not just dollars and cents. So one of the big things that I found was a huge problem. I was losing a lot of money on Fridays, and I found that when I did have a losing day on a Friday, it killed my weekend and it actually spilled into my next week and my Monday. So what I'm looking at here is how can I preserve momentum and still trade? Because we need to be traders. We're traders, and it's a session, and we need to trade it. But there's got to be parameters, and this is how I manage my risk on a Friday. Winning week. If I'm having a winning week, 50% of my profits go in my pocket. If it's a losing week, if it's a small losing week, I trade as usual. It means I'm doing okay. Maybe I got a bad break somewhere, and I'm not necessarily on the right side of the ledger monetarily, but I'm still trading pretty well. Trade as usual. If it's a big losing week, you need to wait till Monday. You need to shut it down because you're getting your tail kicked, and the best thing you can do when you're losing is to stop. Take some time, cool off. Neutral, usual trading. Trade as usual. If you're at flat, if you're at zero or scratch for the week, trade as usual. Or, you can reduce your leverage or don't trade at all. You have that option. For me, if I'm neutral, I typically reduce my leverage because I want to see if I can make a little bit of money, but I don't want to lose much money. So I always reduce my leverage if I'm at scratch because it means I'm winning some, I'm losing some, but I'm not doing very well. And a lot of times, if I'm having a small losing week, I feel better about taking a small losing week than a scratch week. So I typically reduce my leverage and just try to get on the right side of the ledger because it's all about Monday. The best trades are always in front of you. They're never behind you. Remember that. In any case, PCE, this is going to be, our fundamental of the day. It's one of those things that I'm interested in a lot, and this is the reason why right here. Take a look at this. You've got the U.S. dollar absolutely tanking over about this is the U.S. dollar index over about the past 2 hours. Right there, you can see that's your PCE bar. Why would the U.S. dollar be tanking and stocks are tanking? That doesn't make any sense. All of a sudden, the U.S. dollar, the dollar index is down around 104. It doesn't make any sense, and I'm going to show you why. The reasons? The biggest reason is the tariffs go into effect April 2nd, which is going to be next week, and traders are scared about what's going to happen over the weekend. Trump does what he wants, and he makes announcements when he wants. Sometimes it's in the middle of the night, and there's going to be a lot of trade negotiations that are going to go on over this weekend. In my opinion, this right here is sort of indicative of that. So there's something happening here behind the scenes, and it ain't PCE, but we're going to go over PCE anyways. PCE, it's an inflationary metric. That's it. That's all you need to know. It means when PCE goes up, that's bullish for the USD. That means you're going to have to hike rates to preserve pricing stability. If PCE comes in low, it's bearish. It means you're going to cut rates and potentially, try to stimulate some economic growth via increasing the money supply. Now, what all that means is inflation continues to rise. There it is. What would that be? Bullish for the USD. We're seeing the exact opposite happen. I love this situation for a couple of reasons. Number one, the initial reaction isn't necessarily indicative of what's going to happen maybe next week. So I love this. This is going to give me a chance to trade a correction, and I think that that's absolutely fantastic. But if, in fact, a weaker dollar does come into play, what does that mean for our majors? Well, we just showed you a trade on the dollar Swissy. We're going to get back to the majors here in just a second. I think this is setting up beautifully for early next week. It's a contradictory move, and I love those because they always even themselves out. All right, in any case, inflation continues to rise. The big headline numbers that we've been reading about all morning, 2.8% core PCE. That's the PCE. That's the inflation index with a few items stripped out of it, a few of the more volatile. Now, if you're looking at 2.8, all right, that's a pretty good rise because that's seasonally adjusted for February. That means that we're still rising, and I'm going to show you the chart that's miserable here in a second. Core PCE price index, 0.4%. You'll notice that regular PCE sort of right in the pocket, and a lot of that the regular PCE has to do with your energy pricing. We'll talk about that in just a little bit. Personal income went up a little bit. That's sort of what you expect. Definitely when you're in an inflationary cycle, as long as the incomes outpace the inflation, then we call it really sort of a net wash. But personal spending down a little bit. That's sort of an inflationary metric. It is up from the last the last month, but it's still up. In personal consumption, it's up a little bit, but still very, very, very weak. So we've got a lot of things there that suggest recession's on the way. And right here, here's the news of the day: 45-degree angle. This is it. This is your PCE. This is your raw PCE price index, or this is core PCE. Core PCE over the last year. That's a 45-degree angle. That is horrible. That means that inflation is not just growing, but it's growing at a rapid rate. And it all comes down to this, guys. 10-year chart, core PCE, what happens? This is nice and steady. This is pretty much what you would expect out of inflation. Inflation you can't really get away from, especially if you're using fiat currencies. The dollars typically always lose their purchasing power. That's the way that fiat currencies are designed. We did a module about inflation and interest rates in the Trading Academy, and I go into it for about 30 minutes. So we're not going to do it here, but this is acceptable. Your wages are pretty much outpacing the growth of prices, so you're doing well. It means your real inflation is okay. You're not getting destroyed. But this right here, this is when the game changed. Back in 2020, you saw a period of deflation, COVID. That typically never happens, but it happened right there. And then what have you seen since then? You've seen an exponential rise in the price index. So when Jay Powell comes out in his meetings and he says, inflation, we're making progress. No, you're not. There's been absolutely nothing that stopped this, the U.S. dollar from losing purchasing power, from prices to go up, and this is a trend globally. Now, the reason why this happened was because the central bankers, the powers that be, in order to stave off an economic recession, decided that they were going to pump the markets full of money and make sure that we didn't get into a recession, a deep one, after COVID. That's it. We're in big trouble here, inflationary-wise. There's going to be some big things that are going to have to happen for us to get back on the right foot. And when I say us, I don't just mean the United States. I mean globally. There's a real problem here because now the feds are going to start cutting interest rates to stimulate economic growth, and it's going to make the problem exponentially worse. I've said it before, and I'll say it again. This is Jay Powell's last year as the Fed chair, and it's not necessarily his fault, but he's gone. He will step down this year. That's my prediction. By Christmas, he will have announced either the end of his term or will have left the office. That's my prediction. Let me see. JC, but usually when stocks go down, the dollar goes up, right? Yeah, typically it's going to be the other way around. So when the dollar goes down, stocks would go up. We're not seeing that. This is an inverse reaction. That's why I'm sort of giddy. I'm excited. I feel like a young man again. I'm watching these because it's an overreaction. We know what's coming next week with tariffs, but right now stocks are absolutely tanking. The Dow's off about 500 points. This is going to be great trading here in a second. The Dow's off 500 points. U.S. dollar's also off about 0.25%. We got problems. There's trouble in paradise here. And I've been saying that these markets are heavy, and the U.S. 100 is getting down to one of our key breakout levels. You're absolutely right, JC. It just hasn't happened today. All right, let's talk 9 EMA. We're going to go ahead and get on with this workshop. The 9 EMA trading strategy is one that was one of our most popular videos on our How to Trade Calm YouTube channel. If you haven't seen it, go ahead and cruise over there, check it out. And it's very simple. What we're going to cover today is very, very simple, but it can make you money. Now, I get a lot of criticism about these strategies. Shane, well, how do you trade so many strategies? And I said, well, there's a time and a place for everything. Honestly, I trade my levels. I trade my own personal Fibonacci counterpunch. That's what I've been working with for a long time. But you can make money doing this crossover stuff. You really can. Today, we're not going to do crossovers. We're going to do price crossing over the 9 EMA, but we're going to confirm it with the RSI. I want everybody just to understand the rules. This is very, very simple. What you have is a 9 EMA. All right, a 9 exponential moving average. When price breaks over the 9 EMA, you're looking to buy the market. When price breaks under the EMA, you're looking to sell the market. That can be difficult, especially when you get into choppy price action on short time frames. I think that you can get away with this trading longer time frames by just going with the basic rules. But if you're going to go intraday like most of us are here, you're trading a 5 minute. We're going to trade 1 minute here in a second. You're trading 5 minutes. You're trading 1 minute. You're trading 30 minutes or 15-minute charts. You need a tool. You need something to keep you out of trouble. And one of the things that can really help you is RSI, or the Relative Strength Index. Now, the big thing that we have to understand when we're trading the RSI is we don't trade all the time. We're waiting for the RSI to get to a specific level before we enter. In this case, RSI was up over that 70 level, and that tells us to sell. Now, when RSI goes beneath 30, it tells us to buy. Now, remember, it's not going to be linear, meaning when we're in oversold territory, you're probably not going to get the price to cross over that 9. You're probably not going to get that. Now, you just wait. Essentially, you wait. Now, of course, you want the RSI still to be up around that 70. The closer up to 70 when you get your sell, excuse me, very, very dry at this altitude. You want it to be up near overbought territory when you sell, but the thing is that's where you don't live in a perfect world. So what I would recommend is when you get into oversold territory, immediately or overbought territory, we're thinking sell. Oversold, we're thinking buy. And then we give it some time to set up properly. And what gets us into the market is going to be that bar, in this case, closing beneath the 9 EMA. It's easier to show you than to talk you through it. So let's go ahead and make some trades. Okay, this is our U.S. dollar index 30-minute chart. I wanted to show this because it's absolutely tanking. I mean tanking. So right now, your 1 minute chart, DXY is coming off in a big, big way. You can see this is really just a staggering look at price action. So if we know the dollar's down big, let's go ahead and take a look at our Great Britain Pound USD 5-minute chart now. Now, this is this layout. What we have here is these are color-coded bars. I coded these. I showed you the code and how to do this in our Grok 3 video, which is also on How to Trade Calm YouTube. What we're doing with this, green bars, I don't care if they're negative closes or not, green bars are above your 9 EMA, and your red bars are below it. That makes it real simple to understand you're either in bearish territory or you're in bullish territory. Regardless, forget about the actual structure of the candlesticks themselves. Okay, now we've also got 2 lines on this chart. Now, what exactly do those mean? Those are the range. Those are the previous period's low and the previous period's high. Not necessarily the biggest deal on the 5-minute chart, but on daily charts, weekly charts, monthly charts, can be an absolutely fantastic tool to let you know those key levels those are imperative. If you don't know where those are, you're in big trouble. All right, so in any case, right here, Great Britain Pound, U.S. dollar 5-minute chart. Right now, we're in overbought territory right there, or overbought territory, so we would be looking to sell. Now, in order to sell this thing, you're going to have to get a bar close beneath the 9 EMA. So right there, and this is one of these things I'm going to show you. It's definitely a pro tip. Your close on that bar right there was 129.55, and your 9 EMA was 129.55. It's right on the chalk. Don't do it. These trades need to be obvious. They need to be obvious. Okay? So if, in fact, you get into a situation where it's closed, it's like a fractional pip beneath your 9 EMA, don't do it. Come back and wait for a better trade. You can see right there, if you took that trade, you pretty much got stopped out. You got a bar close beneath the 9 EMA right there. You probably could have taken that chart. Your stop loss is always going to be above the previous swing high. So in this case, your stop loss probably would have been right up in here somewhere. So you'd had an opportunity potentially to sell there. You'd have got a little bit of love and then stopped out. So that would have been a loser. That would have definitely been a losing trade. And as soon as your trade wins or loses, then we stop and we reset and we wait for this thing to set up again. It's that simple. Very, very simple. Tough, really a tough type of a rotational market there, but we've got something there. All right, I want to look at the NASDAQ because I think we're going to get some trading right now. Let's go see. Emmanuel, is RSI, is it valid in all time frames? Yeah, it is. We're going to take it down on the 1 minute time frame. The idea is that you're just adjusting your time frame down to reduce your risk, but you have to make sure that your alignments, risk versus reward, those align. If they don't align, you're going to run into trouble doing this stuff. So I'm going to show you how to do that right now. Okay, NASDAQ. This is E-mini NASDAQ futures. The market's definitely tanking off about 1.5%. You can see this is a nice big sell-off right here. 5-minute chart. We're deep in oversold territory. We want to buy. We want to buy. In order to buy, you're going to need a 5-minute bar to close above your 9 EMA. All right, let's go now. Let's make a trade. We got to get dirty here. I want to trade. I want to trade right now. Okay, so what do we have? 1 minute chart, deep in oversold territory. Deep in oversold territory. So what we're waiting for is really the first 1 minute bar to close above our 9 EMA, and then we're going to send them long. So if I'm interested in getting this trade right this minute, we're absolutely tanking. And, you can see right back here, sort of right around the U.S. Open, RSI was an overbought territory. You caught a real nice sell. You're actually probably still short and making a ton of money on that if, in fact, you're looking to take a position. But something like this, now we're looking to get in on the bottom of this market. It's a very heavy market. There's no doubt about it. Let's see what else we can get going. It looks like we're going to be waiting a while for a trade there. Let's see what else do we have here. Let's look at Let's look at the Euro USD 1 minute chart, see what we got. Okay, Euro USD, we're in overbought territory. I want to sell, and I want to sell right now. Right there, overbought. Your RSI's up over 70. We're on a 1 minute chart. I want to see a negative close. If I get a negative close beneath our 9 EMA, I'm going to load up short. It's that simple. So the biggest thing that I really want to get one of these live so I can show you exactly how we need to execute and actually make a few bucks, put a few bucks on the board. But if this, in fact, is the case, and you'll see exactly how small and choppy these bars get on Forex pairs via 1 minute chart. I mean, it's tough. But right now, you're sort of in the heart of the U.S. session, U.S.-London overlap. You're right before the London close, and you're right after the U.S. Open. I mean, if you're going to do this on short time frames, this is when you do it. Right now, during that overlap, this is when you do it. I would limit my trading probably to about 9 a.m. Eastern to about 11 a.m. Eastern if I was going to scalp these things on real short time frames using Forex pairs. No question about it. Now, commodities are different. Commodities and your stock indices are different. In any case, right here you can see we're still bullish. And remember, this is color coded. It's easy. You just look. You say, okay, we're below there. We're above here. We need a red candle. That's what we need. We need a red candle to set up. This is starting to look pretty good to me. Let's go to a 5 minute chart here and see what exactly is happening. Okay, we're still in. You can see if we're going to take this on a 5 minute chart, we have a lot of work to do. We have a lot of work to do here. That's why we're looking to get a trade. We're looking for that 1 minute chart. We're pretty close. We really are. If we get a little bit of a negative push here and can get a close somewhere down around 108.26, somewhere down in there, then we'll have a shot to send this low on a real tight scalp. Now, it doesn't look like it's going to cooperate, of course, but that's okay. All right, we're going to go ahead and stick a fork in that one for a minute. Great Brent pound. Let's go ahead. Let's get over to the gold market. Now, this is a challenge. This is going to be a challenge on the 5 minute because you've got a trade potentially setting up right here. And what would this essentially mean? It would mean that maybe the dollar's route is over. We're looking for that correction to sort of subside now. Remember, weaker dollars lead to higher gold prices. So if we're on a 5-minute time frame, something like this, you've got a chance potentially to trade. The problem is your RSI. It's not good enough. You didn't get to where you needed to get with your RSI. So right here, what can we do? We can also take this down to a 1-minute chart. Now, did we miss our trade? Right there, overbought territory at about 8:05 my time, about 10:05 Eastern. You're in overbought at about, let's see, your RSI was at about 70.5, pretty close, but that's your sell. That's a beautiful thing, and that's exactly what we're looking to do. But right this minute, you can see this market's absolutely tanking, and we're coming off in a big, big way. So we're probably going to be on a buy here relatively soon. But this stuff right here, that got you into some pretty good money. That's not necessarily the worst thing I've ever seen. Euro USD, come on, guys. Let's see it. Come on, get us in. All right. Gold, that's going to take a while to set up. Let's go back to one of our stock indices. Let's try the US 500. This is futures. Okay, right here, 1-minute chart. This is just fine. I mean, you can execute on this time frame during this time of day. The big thing you got to remember is you just can't you can't do this during flat markets. It means later today, like after lunch, like lunch in New York about noon, 10 a.m. my time, 12 p.m. Eastern time. You need to start pulling back the reins and at least use larger time frames. Come on, let's get a trade. Right here, oversold territory, deep and oversold. We're on a 1 minute. I don't really feel bad at all about this. Okay, right here, we're going to get a trade. All right, let's go ahead. Let's pull our DOM up. Okay, what do we want to do here? We're going to trade 4 lots. And I'm going to go ahead and put this thing on if we can get a close up there. We got about 30 seconds. Give me that close, and we're going to have a shot. Now, listen, we're fighting a stiff trend, and the reason why is because, the reason why we'll take this trade is because we're scalping. You can scalp against the trend and be okay. What you can't do is try to take day trades against trends, especially this early in the day, and expect them to work for you unless you have a really strict technical structure. We're almost there. 1 more minute. We need a bullish close above that 9 EMA, and then we're going to send them long. We've got 4 contracts of the E-mini S&P 500. That's a significant trade. We're looking to, that's about $50 a tick, which is fine. And what we're going to do is just a real tight scalp. If we can get this close, all right, I can already tell you where our stop loss is going to be. I'm going to have it a couple of ticks down here, right beneath that swing low. That's going to be our out. Now, it's going to be pretty tight depending on where this bar closes. But right here, we can't get a bar close above the 9. That means it's a real stiff trend, and that's something we got to recognize and understand that our trade's going to be higher risk. I want to get at least one of these things executed, though, right now. So something like this, you can see, we went up. I thought we had a chance there. We just came off. That's why you've got to wait. You've got to wait for price to cross and then actually give you a trade. It's imperative that you wait. If you don't wait, you're going to run into big trouble doing this. All right, so right here, you've got that US 500 sort of trading sideways. All right, we're still in the game. I mean, this could be very good for us. We just need a bullish close. We've got to see something on the 1 minute time frame. Now, listen, the next 30-minute stanza just started. That's big for me. That goes back to market profile. That's a long story, but what that means is the next 30-minute section of trading has just begun about 2 minutes ago, so we could see really anything with regards to price action from here. I expect us to see a retracement. I don't know that this is going to be this steep of a trend the entire day. Is this a good time to potentially take this trade? Absolutely. Absolutely. Our 30-minute bars are hugely important, especially with stock index futures, and what you're going to see potentially is a retracement. So if we're on a 1 minute chart, I'm going to back off to a 30-minute chart here in a second and sort of show you what I'm thinking. You had a massive dump there. If, in fact, we can get this thing to set up, we're going to play that retracement back up into that 30 minutes. Now, if we can't get it to set up, if we don't get that crossover up over that 9 EMA, then we've got to stay out of the market. And the reason why is you've got a tremendous dump going on here, a tremendous move. This is steep. Nothing's retracing right now. A lot of sellers in the market. So in order for us to consider entering this to the long, we've got to use our heads and we've got to be patient and just wait and think about exactly what we need to get in. We're deep into oversold on the 1 minute here with the E-mini, and it doesn't look like we're going to get. I mean, we need a crossover. The price bar has to cross the 9, or else we can't get in. Let's see, High Tech. How you doing, High Tech Freaks? I'm doing pretty well. How are you? Sort of running long today because I want to execute one of these trades and make a few bucks before we sign off. We haven't had a trade yet. Just is what it is. We got a little doji setting up right there. Let's go to a different market. Gold. Okay, gold. You're on a buy here with gold as well. Basically everything. Let's look at gold futures here. Gold futures sort of real choppy. Real sort of choppy. That means that our April contract, it looks to me like our volumes, looks to me like we've already rolled. Yeah, there's nothing there. We've got to look at something else. WTI crude oil. Crude oil, okay, oversold territory. We're coming off. The entire financial world basically is ending right now. Whatever happened with our Euro USD? Okay, there it is. So right there, of course, you look at a million different trades. We want to sell. Why did we want to sell? Right there. We were in overbought territory. Then right there, you're looking to sell. So let's go ahead and take it. Let's sell it right now. Are we a little late to the party? Yeah, we are, but we know where our stop loss is. Now remember, don't put your stop loss just one tick above that high, 131, 108.31. You don't want to do that. You want to put this up just a little bit higher, somewhere right in there. Shade it by a few pips. Now it looks like we're going to get knocked out, but that's okay. I mean, that's not the biggest loss in the world. We went short right there. Theoretically, you would have gone short at 108.24, and you're going to get stopped out at 32, somewhere up in there. I mean, it's an 8-pip risk. It's just not that big of a deal, depending on how much leverage you have. We'll see how this one plays out, but it looks to me like we're going to get stopped. So I'll go ahead and put a, let's see, what do we want to do here? You definitely want to be getting out somewhere right around 32-ish. So let's go right up here, 32.5. That would pretty much be my sell, something like that. That'll be our stop loss. If in fact we do get the opportunity to stay in this trade, it looks like we're going to get swept out right now. It's heavy. Things are heavy, that's for sure. Let's go ahead and let that one set. I want to get back over to this E-mini. Okay, right here we're starting to see some signs that maybe this futures contract is based in just a little bit. What do we have for gold? Let's see. What do we have for gold here? Gold, this is going to be still the same thing. It's just our chart isn't coded. Gold, you're still not out of range on that RSI just yet. Okay, right here we're making a comeback. Don't call it a comeback, right? We've got to see some good negative price action. Okay, now we're back down to our late entry, which was break even. I made a video on waiting for your entry on these crossovers or on this 9 EMA strategy using Fibonacci's. Check that one out if you haven't seen it. But right here, it's starting to show signs of life. We want to see that nice follow through. Now, here's the most important thing. Here's the most important thing. Let's see, got a scalp on the US 100. That's fantastic high tech. The most important thing you're ever going to do with this strategy or any of these strategies that are on our channel is you've got to dial in your risk versus reward. Now, right here, I sort of gave you the stop out. Swing high, previous swing high. That right there is why you pad these by at least a pip, maybe 2 pips, because you see stops get hunted like that all the time before the market reverses. That happens. That's like gospel. That happens all the time. So what would my profit target be? Well, if I got short from where we got short, which is a pullback basically to the 9 EMA, and we're at 120, 108.28, and our stop loss is at 32, I could easily go with a 1-to-1. A lot of people don't like that. They say, Shane, you don't know what you're talking about. Okay, that could be your first, that could be a profit target. You can make money doing that. Now, if you got your traditional entry down here, right around 24 and 32, you could put this down. You could put this down a ways. I mean, you could put this right down to maybe 16-ish, something like that. 1-to-1, 1-to-2s. I like 1-to-1s, especially if I'm doing a 1-minute chart. If I got a 1-to-1, I already made my money. I just made $50-something and I'm out. You say, Shane, it's only $50. I go, yeah, but we're going to be doing this probably for the next couple hours. So you're looking at making money. Now, how's the other way? What's the more traditional way to do it? Market structure. A lot of you are smart money traders. A lot of you believe in order blocks and things like that. And, you know, the biggest thing, I don't care what you are, just be consistent. If, in fact, you were looking for maybe a market structure type of a thing, this area right here, this swing low, could potentially be your target. And if it is, that's down there to right around 108.15, which is about another 7 pips. So you can see we had a pretty darn good trade, but it wasn't easy. It went against us, and that was a big problem. You know, that's why you always pad those. I always say if you put it just right on that line, right on these swing highs, you're a pork chop. There's an old saying here in Montana when you go hiking. There's grizzly bears here. The grizzly bears will eat you. There's an old saying that says, hey, listen, are you worried about the bears? And I go, no, don't be a pork chop. You don't go running through the woods with meat hanging around your neck. You go out, you're packing. You know, you're taking your firearm. You're making noise. You don't want to sneak up on a grizzly bear. Don't be a pork chop. If you're doing stuff like this, you're asking to be made an example of. You're asking your broker to stop you out before the market reverses. This is panning out to be a pretty good little trade there, and we took some early heat. All right, right here, this is really what I wanted. This is what I want right here. 4 seconds. All right, we're running way long, but I want this trade to set up. Okay, we're going to give it 1 more minute, and if it sets up, we're going to go long, and if it doesn't, we won't. So right here, I think this is what we want. Fighting a major trend. Remember, though, we're scalping. You're scalping the trend. You're not calling bottoms. You're not calling tops. You're scalping. And what does scalping mean? It means we're going to hit it and quit it. We're going to get in. We're going to get out. Get what you're going to get front and center. That's what we're going to do. I'm watching closely. What's my profit target going to be? I don't know that just yet, just because why? I don't know exactly where we're going to get in. I know where my out is. It's down there right around 56.50. You'd love something right up in here. $67. Is it good enough? Not really. Okay, right there. There's our buy. All right, we're long. Okay, there we are. We're long, and that essentially is going to be your trade. So we've got to make sure that we're shaded right here. There's your swing low. There's your positive. There's your long entry. The real question now is, what do? We wait. You've got to figure out where your profit target is, though. I like 1-to-1s, especially if we're scalping. So 56, 56.50, and we're long from 61, 62, or we're long from what? 61.75. So that's going to be 11. So we're going to have to get we're going to have to be looking at about 72. That's a basic 1-to-1, isn't it? Yeah, 11. Let's see, 11.75. It's going to be about 72, somewhere right in there. So that's the trade. So you say, Shane, are you really scalping? I go, well, we're using 1-minute charts. Personally, it's hard to turn down when you get up a couple $100, which we're going to get up right now. But that's the key. If you're going to trade this stuff, if you're going to trade 9 EMAs, you're going to have to catch some moves. And right now, hey, listen, this thing's going against us. Did we get the best entry we could? A lot of times in these 9 EMAs, you get long right there, and then you see the market start to pull back in your face. We built a video on how to improve your trade location. Something like that. What happened? Well, there we go. So something like this, Fibonacci from spike high into that upper extreme. Maybe something like this. Pullback zone. We could have made our entry a lot better. We made a whole video on that. It's on the How to Trade Calm YouTube channel. Check it out. So what's going on right now? Doesn't look good. Market's going against us. We fought a stiff trend, or we're fighting a stiff trend, but we're not out yet. We got a pretty darn good stop loss location. We've got decent entry, I would say. The question is do we grind higher from here? Did we, in fact, call maybe a little bit of a swing low? Remember, we're scalping. The world doesn't need to end. We don't need to see all of these losses get bought back. We don't need to see that. We're just looking for a bump. That's it. An 11-point bump, admittedly, is kind of a lot for the E-mini S&P 500, but it's not a bad trade. We could be out of this trade in the next 5 minutes, easily. I would expect to be out of it in the next 18. Now, is that technically scalping? Some would argue with that. It's not a bad trade, though. All right, now we're starting to spin higher. This is what we want. This is what we want. Now we're starting to spin higher a little bit. All right, let's spin up there and let's have a look. Let's have a look at 65. Give me 65, and you'll see that it's going to be very, very difficult to stay in this trade, especially with our leverage, because we're making a lot of money right now. 350, 400. Okay, we're up 450. Let's spin higher though. Let's see if we can get up 500 or 600 bucks here. I mean, we're up pretty good right now. I mean, we're making a nice little trade. This trade, okay, now that's what we want. Now we're up in the 500s. We got a little bit of selling right there in front of 56.64. The question is can we take that out and spin higher? Is it possible? Anything's possible. Do we want to sit here all day to let it happen? Now we're back down to around break even. Still love the way the market structure looks. I would be very confident in the next 15 minutes that we do grind a little bit higher. But this is trading, guys. You've got to decide what you want to do. What could we do right now? If we were interested, we could move the stop right up there to that swing low. Could. What does that mean for our profit target? It means you probably need to bring your profit target down to try to get out at a 1-to-1, or you leave it where it's at and just try to get in on this runner while limiting your risk. Personally, typically the first Your first inclination's always your best. So something to think about there. And there's your break. There's the big break you want. Let's see if we can get a little bit more. That's 600. And remember, these are demo dollars. I'm not trading real money. Sort of got shut down on trading the real money on the live streams. 600. Let's go 455, 350. You can see we're getting some nice compression. I'm going to let this go one more minute, and then we're going to sign off. I've run way long today. Friday strategy session. 150, 200, 1. Now you're back to break even. The question is do we hold them or do we fold them? Well, sort of up to you. For me, very difficult to pass on a quick 600, especially when we really didn't take much of a draw there. So I'm watching that closely. Still good bullish price action here, though. Now it's traders' preference. Now this is the difference between winning traders and losing traders. A lot of losing traders took small profits on this trade. A lot of winning traders are willing to wait this out for the bigger move, the next leg up. It's tough, though. We're fighting a real stiff downtrend here, and the U.S. dollar looks to me like it's starting to gain a little bit of puff back. But the real question is do we buy back off of that low? There's plenty of room there to get this done. It's just a question of if the bidders win or if they lose. Still in bullish position on our trade, though. Not necessarily the worst idea we've ever had. All right, everybody, that's a good look at the 9 EMA. That's probably 15. Yeah, we let that one run a while. Let me see, Emmanuel, can we apply this in currency pairs or only on stocks? No, we did it on a currency pair. Remember this Euro USD? We did this one right here. Got a pretty good move. 1 minute charts, very, very tight, very, very tight action. And here's your correction. So, we did it. You can do it on pretty much anything you want. Just watch your risk. Believe me, the difference between the winners and the losers is risk. That's it. The people that are almost guaranteed to lose align their stops where I showed you to align them, and they only take a few dollars on each trade. The key to trading this 9 EMA is going to be wait. Number one, wait for the technical setup to develop. Trade it during the right time. Don't trade this thing during dead periods. Trade it when it's alive. If you want to trade this on Forex pairs on like 5-minute time frames or 1 minute, you need to be doing it during the London-US overlap. That's where you need to focus your efforts. Other than that, you can back off to a 4-hour and make it a great swing trading approach. You're probably going to have more success doing that. All right, everybody, I've rambled on long enough. We've ran way long, almost 50 minutes. So I'm going to go ahead and sign off here for today. I want to thank you for joining me across all of our platforms. The Artful Baker, absolutely, you're 100% welcome. Interesting day. If you're in that Thailand region, like I said, thoughts and prayers. I don't know where that market's going to open Monday. No one does. There's a lot going on next week. We have a stream schedule out. We're going to be streaming, I believe, Monday, Tuesday, Wednesday next week. So just stay tuned for those live streams, and we'll do the best we can to cover everything you need to know. If you have any questions and you're seeing our live streams for the first time, head on over to howtotrade.com, log in, and send me a private message. Say hi. Feel free to check out some of our learning stuff and also some of our trade ideas. All right, everybody, that's a wrap for today. Ooh, that E-mini S&P trade is definitely tanking now. We probably should have taken the money, but remember, build your risk in. I'm going to give you can risk up to 5% on a given trade. That's what I would say. So the more money you have, the more you can risk, but just don't get overextended or you won't be in the game very long. I want everybody in here to trade. Trade. All right, have a great weekend, and we'll see you back here Monday. Trade the action well, and we'll talk soon. See ya.